Investors and traders, welcome to the channel Market Chat button. Today is 30th of August 2024. I hope everyone is having a great day. We will be taking a look at the key US markets in this video. The focus will be mainly on the dollar, and we'll take a look at some of the currencies, euro versus the US dollar, the Japanese yen, and the Great British Pound versus the US dollar, and the bond market, and gold and silver briefly. And then over the weekend, we'll actually take a deeper dive into the US stock market, and we'll also try to do a sector analysis as well. So this way, we'll have more time by splitting the video into two parts, one on Friday and then one on Sunday. As always, this video is for educational purposes only and it's not a financial advice. So we are looking at our timing model, and we are in a zone between 29th of August and 3rd of September, and for the Japanese index Nikkei, it's actually timing coming up on the 5th of September. So we are really watching the price action during this time period. So we do have the timing coming in, but also the market has been pretty strong. So if you look at yesterday, which was 29th of August, we did have we're not able to see it properly, but it was a doji formation. So the market was in sort of an indecision, but the market did make a new all-time high yesterday, but closed lower, unchanged, pretty much unchanged. And today is really interesting because today is the end of a trading month. It is also the end of the trading week, and we have been in a up week, and we have also been in an up month. And today also happens to be just the day before a holiday. And the tendency is that whenever there is a key holiday, the market has a tendency to actually close higher. So where we saw the Dow Jones Industrial Cash Index actually closing at an all-time high. So the highest point was actually it made a new all-time high. So this is something that we need to make a note of, because in the futures market we see something different than what we see in the cash market. So this one happens to be the Dow Jones Industrial Cash Market. Now we'll move over to the dollar index. So here we go. So this is the daily chart of the dollar index, which is a basket of currencies. About 52 to about 51 to 52% is the euro in this basket of currencies. And here our target was actually achieved and actually breached as well when the market actually moved much lower and tested the bottom of 28th of December 2023. So we do have structural support around here coming from 28th of December 2023 bottom, and also this was the breakout point back in July, 27th of July 2023. So this is what we mentioned in the previous videos. We were expecting some bounce, and look at it's been a pretty strong bounce for the past 3 days, but let's take a look at in terms of retracement. So let's take a look at from this key swing. Here we go, and let's see where the 382 comes in. So it looks like it has a little bit further to go from this retracement from this key swing. Ideally we should also be taking from this one, and we have seen the largest here we go. So we have seen the largest correction in this swing of this much magnitude, and this is pretty much where the market closed. So it is hitting some sort of resistance, and then slightly above is also the 38.2% retracement. So what we are looking at in US dollar is that 107 is a pretty important top in our analysis, and the market actually tried to reclaim that, but it was just able to fill this gap in, and it's just now testing the bottom of this big massive trading range. So looks like we might begin to head into resistance, perhaps early part of next week, and the trading in earnest will begin next Tuesday because of the labor holiday coming up next Monday. And the other really important thing is that let's actually move on to the weekly chart. Here we go. So this is going to be the really longer term view. So here you can see that we have this ladle drawn as well, this line which I'm calling a ladle line. So there is some support from here as well, but eventually what we are expecting is the market to move into this gray box here. This is a gap, and of course it can then go and challenge this 99 level. So on a weekly closing basis, if the market actually closes below, especially two consecutive closes on the weekly chart below 99, then that would, in my opinion, accelerate the US dollar's move to the downside, and we could see this big massive ABCD, which could actually see the dollar go and touch 90, 89, or maybe 88 level. So that is a possibility for the US dollar because of the strength that we have seen in the US dollar past few trading days and the past week trading week. This did have implications on the precious metals such as gold and silver, so we'll also take a look at that a little bit later on in the video. And let's have a quick look at some of the currencies. So if we look at the Euro USD, here we go. There we go. So we have had a nice rally up, and it actually went above this point, which was a previous resistance, and then it's just been falling really quickly. So I don't have I have not drawn this bigger ABCD here, but it looks like this CD leg, it got extended. So we were watching this region because the 78.6% retracement and an ABCD formation around here, but you know the market was really strong, so I'm just gonna delete that. And what it did is it actually went and tested these highs, went above that, and now it has pulled back quite a bit actually. So this is really interesting. And if we were to draw a, let's see what sort of extension we got. Here we go. Okay, so it is pretty much between the 1.272 and 1.618. So this is what we are looking at in the Euro USD. I do think that the dollar will actually, after finding some initial strength, is likely to head into resistance. So I would imagine the euro to actually begin to rally as well. And the really interesting one is actually the British pound. And on the daily chart, what the British pound did is something interesting. I don't have it drawn here. So initially we were looking for a fair amount of resistance to come in because of this gap formation, but again the currency was really strong, and I believe it completed this ABCD around here. Let me actually try to draw it here. And there we go. So it was pretty much there, but actually by one day it had a really fake out kind of a rally, and now it's just pulled back. This move looks pretty similar to this move around here. So I think it has a chance that it could actually move a little bit lower perhaps. There we go. So 103, 103 was not 103, excuse me, 1.305. It's kind of where it can actually go and find some good support in this pair. And then if we take a look at the Japanese yen, so this has been a really interesting one because here this is the whole story about the carry trade. Really, in my opinion, actually the market actually crashed. Then bottom on the 5th of August in the indices we had a key timing coming in, and we also had some key price levels, and what we have seen is market go in a trading range, but it found resistance from the 38.2% retracement, and I believe what it has done is now pretty much gone to the 78.6% retracement. There we go. So it's a range bound market in my opinion. Now what the market could do is actually go and test the top of the range. That's one possibility, but what we are looking at is weakness coming in the US dollar. So it looks like this market is more likely to remain range bound, and if it if it breaks above 150, then of course it's got a chance to move quite a bit higher. But the way it looks like is this market would actually remain range bound between 143 and 149, which is a pretty large range for the currency for quite some time. And then eventually break out either way. But it does look like the 5th of August low is a really important low. It's also a double bottom with respect to the 20th of December 2023. So that low is likely to be held for quite some time. And we could expect or anticipate a range bound market in the US dollar versus Japanese yen market. Now, let's take a look at the bond market, because this has been really interesting what's been going on in the bond markets. So we'll look at the shorter end of the curve first. So here our target was 3.9%, and we came up with this target when the market was trading around here back in May. And it was quite difficult to conceive at that time that in fact the market could reach 3.9%, because the market had been going up for quite some time. But we did have a completing pattern, especially this one right at the 78.6% retracement, and this ABCD in blue marked right here. And then there was also this head and shoulder pattern, really big one, and there were smaller ones around here which I've not drawn. Now I deleted them to make the chart look a little bit cleaner. So the interesting thing is the market actually not only met the target but actually exceeded it on the 5th of August. So this is the day, and now it found support from the structure here, and it's just a range bound market, and it has retraced about 50% of this swing, but remains range bound. And this is kind of the market I'm expecting till we begin to get further clarity from the Federal Reserve when the actual rate cuts happen and how much the rate cut might be. So I would expect or anticipate a range bound market, maybe the yields going a little bit higher, testing the upper highs, even 4.20 to 4.25 it could be expected. So you see the 4.15 is the structural resistance around here, so 4.15 to 4.25 is the kind of range on the 2-year treasury note that could be anticipated. Now, really interesting what is going on if we take a look at the towards moving towards more of the longer end of the yield curve. So taking a look at the 10-year treasury note. Now, this is a huge market. This is several times the stock market indices combined. And if you ever happen to be trading the treasury notes or even the long bond futures, you'll notice that they really move really slowly, and there are a couple of reasons because of that. It's a massive market, and it's also a market in which the professionals come and play. So you have other governments coming buying the US debt. You have big institutions coming and operating in this market for hedging purposes. So there are really big money which actually comes into this market, and it's really important to take a look and watch what the bond markets are telling us, because they also happen to be more intelligent markets than the equity markets, because they are more interest rate sensitive, and they are able to actually sniff out what is likely to happen in terms of interest rate movements way before the equity markets are able to, and it's just because the instruments are interest rate instruments. They're really sensitive to the interest rate movements, and there are really clever people operating in these markets. So they happen to actually foretell a story, and this is why we really pay close attention to these interest rate markets. So here, the really interesting thing is that it completed this big ABCD pattern. Here we go. This big ABCD shown in blue, beginning of August. Here we go. On 5th of August is also when the stock indices made a bottom, the notes made a top. So I believe this entire move was something that had to do with the flight to quality, perhaps. And this market has actually since then just gone sideways. So it was actually, in a trading range, finding resistance from the 61.8% retracement, which is 114.03. But today it clearly broke below this trend line. here, if we just join this trend line, this black one right here, so the market is actually broken below that, which actually indicates to me that most likely this breakout point from 8th of August, this low is likely to get tested, which comes at 112 and 16 seconds. And then the bigger pattern ABC is actually pointing to 111 and 12 seconds. That's you know that's about a couple of points lower where the market has closed. But again, it's possible that this market could actually move in such a way. Um, so this is what we're looking at. I think what the market is telling us is that the yields on the 10-year treasury note are actually likely to uh, rise or move higher. And this is what we are also looking at in the 2-year treasury note as well. So there we go. And then if we look at the long bond futures, the 30-year treasury bond futures, it's a different kind of a pattern. So here it did not complete the ABCD, but it did test these highs, this B swing, and then it's just not been able to close higher, and it just seems to be in a pretty big, massive trading range for these bonds. But it looks like it also wants to move a little bit lower, perhaps come back and test this 8th of August low or in that region. Um, in short, it is also indicating that actually, even on the longer end of the curve, the rates have actually moved up slightly. So I think one of the things which the Chairman Powell said in his statement at the Jackson Hole Symposium was, yeah, the time has come for a rate cut. But he also mentioned that on the size of the cut, they remain data dependent. So I think the market might be sniffing that, okay, whether a 25 basis point cut might not be enough, so they might need 50. And if they do 75, that means that there is actually a lot of trouble. So that might actually be a bit of a surprise, and the markets might not like that. So again, what we need to do is watch the economic data such as the employment, jobless claims really carefully. I don't have the figures in front of me, but for the next video I'll try to bring the figures because there were certain important figures that were released today and also yesterday, and this is what we are seeing being reflected into the market. Where the yields have risen. So the bond markets are really interesting on the longer term. Here we go. Yeah, this is the same as what we saw on the uh, daily chart, ABCD, big one. So here you can see the market is just sideways. It does look like the market actually wants to move higher, so lower yields, in a kind of a medium term outlook, but it's just really tight trading range for now. And there's also possibility that if certain key supports um, begin to break to the downside, we could have some sort of a move which could actually retrace quite a bit, and the trend line comes around here, so it could be like testing 119.14, 119.15, which is this breakout area from the 29th of July candle on the weekly chart. Okay, so now let's take a look at the gold market. Here we go. This is the daily chart of the COMEX gold. It's not a spot gold, so if you are watching spot gold, your price is gonna be a little different. This is the futures market, but the patterns are going to be quite similar. So here one of the things is that we were watching this channel formation and this wedge formation around here, but the key thing is that all of this trading range behavior that we saw ever since the market kind of put in a top on the 12th of April, and then begin to break out of it by putting in a bottom around later part of June 2024. The 1.618 expansion is around 2550, and this is where we have seen this market go and just go range bound. So this is a key resistance level around here. We do have higher targets around 2700 for the gold market, and it's possible that the gold market becomes sort of a parabolic and break out of the upper part of this channel, and we could have a fantastic rally, perhaps a quick rally. So it looks like the upside in gold is rather limited for now, at least, because here we go. Here we go. This big ABCD is completing around 2700. Now, one of the reasons, the big buyers of gold are central banks. We have had the Bank of China buying gold early part of the 2024. We saw a fantastic move in the gold. In fact, gold has been one of the best asset classes in terms of performance in 2024. And then they had made part of Basel III that gold is treated like an asset, so that's why they introduced something like that. I do not know too much details about this regulatory stuff, but you can Google about it, read more about this. So because of that, a lot more central banks have actually been buying gold because the treatment now is a little bit different on the balance sheet. It's treated as like an asset, so they can actually borrow against it, perhaps. But that's some sort of ruling exists. So this is one of the reasons that a lot of central banks have been actually buying it, and when they're going to buy, they're not going to look at, okay, whether 2500 is expensive, so I'm going to wait for a few months, maybe the price is down, then I'm going to buy. They're going to buy because part of their operations. It's an institution. It's not the kind of retail who is buying it. So even if it gets to 2700, if these organizations need to buy, they will be buying it at that price. But from a technical perspective, 2700, around that ballpark figure, 2700, 2720, is a big cycle completion, as we see right here. So we could see some sort of at least a pullback that could take place and to bring gold down perhaps a few $100s. So we'll have to wait and see what happens when the market gets there. Silver, let's move to the silver. Let's take a look at the daily chart of the silver market. This is COMEX silver. It's futures chart. It's not the spot silver. If you're looking at the spot silver chart, your prices are going to be slightly different. So this has been also in a huge trading range, and of course the US dollar has been pretty strong over the course of last week and the latter part of 3 days in particular. So that has put some pressure on the silver market, but it remains a pretty range-bound market. And what we were looking at was that the market finding support from the bottom of this range might in fact go on top, test the top of this range and perhaps a little bit higher and complete this big black ABCD around 33.85. So it's kind of in the middle of the range now, hovering around between the 50% 61.8% retracement. So not going anywhere, and part of it has to do with the strength in the gold in the dollar. So if the dollar begins to back off, then I think silver has a chance to move, or maybe go up towards the top of the trading range at least, with a chance of actually completing this big ABCD. So the key thing is that if silver breaks below this 2650 mark, 2630, below these support regions around here, that changes the pattern quite a bit, and we'll have to look at it from a different angle. That perhaps it might have seen some sort of a top, but right now we do have the pattern of higher bottoms here, so higher highs and higher lows. Till this low is taken to the downside, then that will change quite a few things. So this is what we are looking at in the silver market. So we have covered quite a few things. There will be more detail coming about the US stock indices in the video I'll do on Sunday. But I just wanted to cover the bonds and the dollar and the gold and silver markets and some of the currencies briefly. So thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.